want to welcome everyone to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. I know it's been a while, but things are back. Things are back, baby. So you can count on me doing my daily recap from now on. Internet got fixed. It's been a while, but hey, you freebies, Hopefully you missed me, and hopefully you're going to try my premium service again. You can try me out for 1 week free, and then see if you like me. Oh, baby. But this should be a big week for the dollar, big week for the stock market, big week for everything. Obviously, last week we had a big move back up in gold. Silver really not taking out 40, I'll tell you that. I still think silver's a short. 10-year keeps dropping like a stone as the U.S. numbers continue to collapse. And we got a lot of numbers coming out of the U.S. this week, which I think are going to continue to be weak. Obviously, we have the non-farm payroll number coming out. That number looks to be very interesting. I think it's going to be a weak number, and the stock market might sell off. But again, the problem is the worse this data is, the more the market's going to anticipate QE 2.5. That means investing the coupons that the Treasury owns, or QE3, which there's no freaking way, in my opinion. There's no way the Federal Reserve of the United States could institute another quantitative easing program. No way. They can keep on reinvesting their coupons, and that's in itself is keeping rates lower. But 10-year 3.1, we're getting awfully low here. I mean, what a joke. But certainly some other FOMC members thinking what I've been saying, you could still raise rates to 1%, and that really it would still be accommodative, and you could still be buying treasuries doing quantitative easing. So I still think there's plenty of room. I think the market might freak out on that. But what's wrong with going to 1%? Normalizing things. Hey, if things really double dip, the Federal Reserve could pretty much then lower rates to zero again. So 1 is still extremely low. Anyway, again, look at this dollar index. You see this monster outside candle. I mean, this is not good. This means follow through. We took out the high, closing at the low. Not looking very pretty. I think you definitely we're going to do a Fibonacci on the move from the low to the high, and we're talking about 74. So you look at this dollar index, we can still come into 74, and it would still be long. And again, unless you believe the stock market is going to explode, and we're going to go to new highs, or there's going to be quantitative easing in 3, you want to be a bear. But I don't believe that. I don't. Now, I do believe that the dollar is going to continue to get hit a little bit to start the week. G8, really nothing new. It was more about the Middle East. But, look at this euro-dollar chart. It certainly looks like it could go higher. 44.50, easy. Big resistance here from that previous week candle. Remember, this is a weekly chart, not the daily. So almost an outside candle. Euro sterling continues to be weak. Look at the weekly chart on that. Breaking lower. New 5-week low. So that looks to break a little lower. So the euro should be the relative strength loser. Cable continues to perform well. Not because of sterling, just because of the eurozone weakness. So news out of Greece over the weekend. Papademos basically saying they want to come out of the woods. I don't know what the hell that means. But again, big numbers this week, team. Big numbers this week. Australian GDP, Canadian rate decision. We got a lot of stuff. Canadian GDP, that's tomorrow. We even had New Zealand trade balance and new home sales coming out of Australia tonight. And again, I will be doing a daily recap again. But, again, join my fan page on Facebook. I've been posting stuff on there. If you haven't, remember that's Voice of Forex on Facebook. You can also be a friend of mine on Facebook, Andrew.Spanton. Turning out the beginning of the week, again, we still got plenty of data. Canadian data coming out. That's Wednesday morning in Asia. Big number. Manufacturing PMI is supposed to be at 51.6. HSBC was 51.1 last month. Australian GDP also coming out. So Tuesday night, U.S. time, Wednesday morning Asia, big Asian session. And of course, Canada, no change expected there. I don't believe Canada's going to raise rates. No way. And then, of course, Wednesday, we get manufacturing numbers out of London. Maybe we get a reversal in euro sterling then. Retail sales trade balance Thursday morning Asia on Australia. And of course, obviously ADP, U.S. side should be interesting. Really, it's a non-farm payroll number. Look at 194,000. I think it's a weak number. I think this number sucks wind. Oh, baby. So, again, look at that euro sterling. I think we come in a little bit more. Cable should probably be the outperformer. Maybe not till Wednesday. But you look at this weekly chart. Let me get rid of that. You look at this weekly chart, and this thing is taking out the Fibonacci retracement. I mean, this thing looks like it really wants to make another move. I don't buy it. Now, again, if the stock market explodes, all bets are off, people. Dollar collapse. If the stock market really explodes, S&P takes out levels, 1350. Be pretty significant. But this cable, if it does take out, certainly 167. To the moon, Alice. Fly me to the freaking moon. Gone like the wind. And you can even start, maybe even do your long-term Fibonacci. Say, well, maybe this thing's going to really break out. Maybe this thing's going to really take out the monster 50% fib at the 168 and then go to 176. You never know. Just like the lotto, which I lost. It was 171 million. I had to take a big shot. You know, whatever. We had a very good week last week. Hopefully you did too. Take a look at dollar yen on a weekly chart. I think it rolled over. Almost an outside candle to the downside. Should we break through 80.50, it's going to look very weak. I think this dollar yen looking much weaker. Again, with bond yields coming in out of the U.S., certainly does make sense that dollar yen would tend to go lower. Dollar Swiss continues to melt. I can't trade this thing. It's so extended. You had the bounce. Made a little money on the short side and the long side, actually, last week. But it's getting a little bit oversold, don't you think? But to tell you what, you measure the move from the low to the high, and we're talking about 81 people. This dollar Swiss might not stop till 80 freaking 1. Unreal. U.S. housing numbers were sucky, terrible. GDP was sucky last week. Canadian underperforming. Look at that Euro Canada. A lot of Canadian crosses, loonie yen. So this dollar Canada, listen, if oil, gold, and everything's going to go back up, even though the Saudis want, $70, $80 oil. If we're looking at that, but this weekly just looks like it wants to go, doesn't it? Every time this thing comes in, there's a wick. Almost every time we get a wick in the Canadian, don't we? No real wick. No soup for you. But it's getting toppy. I'm not ready to slam the table, stay short, but you know what? Certainly under 96.20. It's going to look pretty weak. Roll back over. And again, if commodities continue to go higher, the stock market explodes, this thing could easily roll over. But you look at this Euro Canada, nice move up. On the daily, it looks much better as a head and shoulder. Closing at 140, you see it right here. Got your neckline, got your shoulders. I think we have a nice rollover in this thing. This euro is not done, but the Canadian dollar in particular really taking on the chin on weak U.S. numbers. Loonie yen can't even rally. Bottom end of the wedge, I'm calling a wedge on all these yens. You take a look at Aussie yen. Big time wedge. Look at the weekly on that one. The daily looks a lot better, but still, that's a nice wedge. Oh, baby. It's going one way or the other. Listen, a wedge formation, I don't care what anyone tells you. They don't know what direction it's going. Many times I find they break it out to break it down. So the first move is the fake out. So maybe the Canadian, the first move is a fake out. Maybe the Aussie, this move up is a fake out. We're going to see. I still think the Aussies are short. I think it topped out. I am nervous about this outside candle, certainly. And the VIX, by the way, taking out 16, got to make you nervous too. So again, I'm pretty much on the sidelines for the U.S. dollar. I think the dollar's going lower, but I'm looking to short it into Tuesday, Wednesday. And again, you look at this dollar index, the Dixie, and it looks like we're going to go lower. I mean, it looks like we're certainly going to hit a fib level. And that's in the 74.15 level. That's only 60 cents away, people. So that could be Euro dollar 144. So New Zealand dollar, obviously the big outperformer. Hopefully you've been listening to my twist. This Aussie Kiwi to the moon. Sorry, I meant New Zealand dollar to the moon. Aussie Kiwi, say bye-bye. Actually, Aussie Kiwi rode that sucker down 300 pips last week. Thank you very much. Have a nice day. That was my easiest position last week by far. Long time. But you measure the move on this thing, we could be talking 85. That's a 3-year chart. You want to see? Let's take a look at a 10-year. Look at that, baby. Taking out levels. We take out this whole 82 with conviction. Gold, oil, all going up. Oh, baby, to the moon. Love it. And again, I love this Aussie Kiwi short. I'm going to give you that one as a freebie. Look at the weekly chart. This baby's got long way to go. We covered it 130.50. Bounced up nicely. Hit our channel line to perfection. Now we probably bounce up to about 133. Hit the exponential and then roll over. But, you know, that Australian number, that Australian jobs number, in my opinion, was the first chink in the armor for the Australian economy. And if China continues to slow down, which I think is in the process of doing, I just think this Australian is toast. And again, commodity currencies really have to crack, though. Stock market has to crack. Risk has to come off. But I just think this thing topped out. On a longer-term basis, it's come a long way, baby. A long way. I think we get more of a monster pullback. And I think that's it. I gave you plenty, people. Remember, I have a premium service. I'm in my chat room 4 hours a day with you people. You get my mentoring. I have 18 years trading experience, people. Not always currencies, S&P, bonds. I used to trade them all. But again, my main focus is foreign exchange. But it's still, I have very good opinions on the S&P, on gold, on silver, oil, individual stocks sometimes. Just not Citibank. Who cares? But again, if you have any questions, feel free to email me. I'm back from vacation for some of you. Oh, baby, try my product. And remember, I am offering an end-of-the-year deal. I am going to not be offering any other deals besides this at the end of the year, and it might be my only deal. $600 US, and you get my service to the end of 2011. You get emails from well-known people that cost you money, trade recommendation emails, Twitters. I have a premium Twitter account. You get twits on that too for intraday, non-chat room when I'm out, updates on our positions. And you get me in the chat room for 4 freaking hours. And you get to interact with my other members, bitch me out when I'm doing poorly. And again, if someone gives you 100 trade recommendations, I really want you to think about this. If someone gives you 100 trade recommendations, how many do you think a good person should be right? Think about that. What's the batting average that gets you into the Hall of Fame in baseball? 350. If you're 350, you suck. But I got to tell you, if you're running above 50%, you make more on your winners than you lose on your losers. You're doing pretty well. And that's the key. You make more on your winners than you lose on your losers. You could be at 35, 40%. And if you make enough more on your winners than your losers, you're going to do very well. I run over 50%. We definitely will have some losses. And our winners usually 20 pips more, sometimes more, but on average. But think that means I'm wrong about 45 times out of every 100 trade recommendations I make. And I'll admit it to you. Not many people will. They guarantee you all this and that, all this crap. I don't do that. Let's look at that Aussie yen again. All right, so if you think I'm this holy grail, I'm not. But money management, discipline, getting out of the losers, reversing when you have to. That's what trading is all about. Listen, I'm a bull on the dollar. I'm a bear on the stock market. I don't stand in the way. I got out of my dollar shorts, longs. Now we're more dollar neutral, short dollar yen, more carry trade short. Maybe this news out of Yemen, by the way, over the weekend. You never know. They're taking over something, the Al-Qaeda network. But you look at this Aussie yen, another one. Again, this thing wedging. Something's coming here. Maybe the stock market goes to the moon. Maybe not. If the bottom line is, you're part of my service, you got me, I got you back. I got you back. And if you're really not sure about what you're doing, you got experience, you just need someone to take you to the next level, that's what I'm all about. For $600, you get me for the rest of the freaking year. Oh, baby. Andrew Spanton, Global Markets Radio, info@globalfxradio.com, the only voice who's back for you freebies. Truly loves to make you money. Remember, dollar down, then up, middle of the week, big reversal, stock market down, weak U.S. numbers. Talk about QE3, no freaking way. Don't buy it. Have a good week. Hopefully you got a good rest. Big week ahead. Monday should be slow. U.S. holiday. Tuesday things kick in gear. Oh baby. Cha-chinga. Bye-bye.